Good morning from our global headquarters in New York. I'm Menace Crenny. You're welcome to Bloomberg Brief. Let's set that agenda. The dollar on track for its worst week since August as the world grapples with the implications of President-elect Trump's trade policies. President Vladimir Putin warns Russia may strike Kyiv with new ballistic missiles in response to Ukraine's attacks. And get your credit cards out. Black Friday kicks off this year's holiday shopping season. We're live at Macy's later this hour. Good morning to you. Check in on these markets. Stocks are still eking out a gain on this shortened trading week, up 0.3%. The fears around some of the restrictions from the U.S. onto Chinese tech, a little bit less than feared, but the flow show continues. Over the past 4 weeks, $141 billion has flown into U.S. equities. And the Bank of America note from Hartnett this morning says you want to be long the U.S. boom and short the global bust. Part of the narrative is the roll down in yields, by the way. Take a look at this. We are trending lower in yield this morning by 6 basis points. The geopolitical headline this morning is in part to do with this. Putin saying that Russia may strike at the heart of Kyiv and some of the strategic targets. We are now back at yields that we haven't seen since before the election. And of course, the PC comes in line. You had that Besant bounce on Monday. More on the bond market in just a moment. The dollar, wow, as these yields roll down, as we recalibrate and reevaluate the Trump trade and the tariff narrative, 5 days that took the dollar down by over 1%. We've broken that 8-week rally in the bond market, in the FX market, in the dollar market. And if the dollar was a stock, HSBC said to me this week, it would be a hold. We have some breaking news for you coming across the Bloomberg terminal this Friday morning. Good morning to you. In the euro area, November consumer prices rise 2.3% year on year. That's pretty much in line with the estimate. The euro area preliminary November core CPI is 2.7%, a little bit better than the estimate of 2.8%. The preliminary consumer prices fall 0.3% in the month. And I can tell you, in France, came in a little bit better, 1.7%. Germany was steady at 2.4%. But Spanish inflation rose at the fastest pace since August of last year. So those inflation numbers will all play into the risks at play for the ECB as they go to their final decision-making process of 2024. Allspring's Henrietta Pacquement is my guest this morning, already looking ahead to next year, saying this: 2025 will be about living with the electoral choices of 2024. Geopolitics and redefining global trade relations are likely to loom large and have the potential to spill over into financial markets. Henrietta joins me this morning. Henrietta, good morning. We top and tail the week. The Besant bounce on Monday. And then this morning, we come in over the past 24 hours, the warnings from Putin, again, about what he might strike at in Kyiv. I put it to you, we're at a serious moment of recalibration of what bonds are to the portfolio.
Yes, absolutely. And I think it makes the bond market that much more attractive. What we've seen over the course of this year is a bit of a normalization of the correlation between bonds and equities. So we've had periods where the equity market has been a bit more volatile and bond markets have responded with lower yields. So that's positive and really helps putting a place for bonds in portfolios at this point in time.
I think the best line I saw over the weekend was Trump will make the 60-40 portfolio great again.
Ah, there you go. Yes.
But look, it is about there are a number of things that we just don't have a quantum around yet. The size of the tax deal and the tariffs and what scale they will be used at. How important is it for the bond market? And the nuance here is the deficit. We know to extend the Trump tax cuts, et cetera, is around $5 trillion. And then there's all the other promises. Is there a break point in your model for the bond market? Is it 7 trillion? Is it 7.5 trillion? If everything gets heaped in together, that's the kind of number we're looking at on a deficit.
So a few things are going to be playing in the bond market, we think. Obviously, the tariffs might have an impact on inflation, particularly in the US. So we need to see how that plays out. And as you say, yes, the US is running a steep deficit at this point. And as a result, we're going to get a lot of issuance in the Treasury markets. So I think the way we're playing that is that we're maybe a little more cautious on the longer end of the yield curve. And we still prefer the sort of intermediate space there, reflecting some of the potential volatility due to issuance. That being said, it is a reserve currency, and so they have more leeway than other countries there.
Give me your take on tariffs. I was listening to Bana Baveja before I sat down in the seat there, and he said, tariff bluster, that's a brave assumption. What's your assumption on tariffs? Because it's vacillated this week already with Mexico, hasn't it?
So I think it is going to be something to look out for. What final shape they actually take, I think it's too early to tell. The way we're looking at it is that it is going to bring volatility, particularly outside of the US, as countries and so on assess how it's going to play out. Because you need to take into account what the US has to import from the outside and how that might affect US companies. Obviously, you've got the sort of fallout for the global economy in a more vulnerable state outside the US. So a lot to play with, and we know as well that there will be discussions. There'll be Trump has a transactional approach to it, so it's not clear cut at this point how it's going to pan out.
Look, there's a number of headwinds, really, to credit. There's a near euphoric state, one could say, in IG and high yield. I mean, that's been the story that we've written many, many times. You bring forward the narrative that it is the neutral rate that may be an additional headwind to that sort of euphoric state in credit. Sorry, not in credit, in the spreads.
In the spread. So, yes, we're seeing a lot of optimism priced into the credit markets, be it in IG, be it in high yield. I would say particularly in the US, a little less so outside the US. You've got slightly wider spreads there. And what we've seen is the sort of cash rates being a bit of a hurdle for investors to go into the bond markets. We think that that's something that's going to normalize into next year as the central banks are going to continue to look to cut, be that the Fed or be that the ECB. So that is actually going to help the technicals on the fixed income side of things.
Well, we've certainly seen a mighty rally since this time just a week ago. We're down 19 basis points on the 10 years. Henrietta, thank you very much. Allspring's Henrietta Pacquement this morning setting the agenda in the bond market. Other stories trending on your Bloomberg terminal. This is what we got for you. The French-German 10-year bond spread widens to 83 basis points. This comes as the far-right leader, Marine Le Pen, gave the Prime Minister, Michel Barnier, until Monday to accede to her budget demands before she decides whether to topple the government. Le Pen holds an outsized leverage in France's split parliament. The yen briefly breached the key psychological level of 150 against the dollar. This on expectations that the BOJ would raise rates in December. It follows hotter than expected Tokyo inflation numbers. TikTok and Meta are bracing for fallout following Australia's new law barring those under 16 years of age from social media. Now, under the law, digital platforms including Snapchat, Instagram and X will be responsible for enforcing the age limit. They face penalties of as much as $32 million for breaches. Coming up in the show, Putin's warning to Kyiv. We'll have the details on the Russian president's latest remarks using new ballistic missiles. And Siebert CIO Malek joins me later this hour, setting the agenda for the markets. It is Bloomberg Brief. I'm Malek here in New York. The Russian President, Vladimir Putin, has warned that his forces could strike decision-making centers in Kyiv with new ballistic missiles. His warning comes after Ukraine fired Western missiles into Russia in recent weeks after getting permission from Washington and London. Our editor for Russian government and economics is Greg Sullivan. Greg, look, these tensions are ratcheting up. There's rhetoric from Putin. He talks about going after decision-making centers. How big an escalation is this rhetoric, and do we expect a material action?
Well, it is a fairly dire warning from Putin that we just heard. In some ways, it is not different from what we've seen before. He has been targeting Kyiv with missiles and drones, but in other ways, he is specifically talking about a new missile, a ballistic missile that was used to target the city of Dnipro. Now, Kyiv has far more air defenses around it than Dnipro does, but these ballistic missiles are harder to defend against. But more importantly, it does come in the context of a broader escalation from both sides. As you said, launching those long-range missiles by Ukraine into Russia. And of course, last week we saw that Russia issued a new nuclear doctrine, lowering the threshold for use of those weapons. So as we approach the third year of this conflict, it does appear that both sides are escalating at the current moment.
And obviously, as this war has endured, Russia's defense minister, North Korea and Russia are becoming more and more connected in terms of military personnel from North Korea. We've got the Russian defense minister in North Korea for talks. What's the purpose of that dialogue?
Well, I think that the stature of the officials that have been visiting North Korea from Russia underscores just how important this cooperation is to Russia. Now, of course, this cooperation has Washington and its allies on edge. Of course, as we were talking about those missiles that Ukraine fired into Russia, one of the reasons why Washington and London gave permission to Ukraine to use them was because North Korea has sent tens of thousands of troops into Russia to help fight Ukraine. So this deepening cooperation does have Washington and its allies on edge, but it is very important to Russia. And, it's continuing. Both Seoul and the U.S. have accused North Korea of providing arms and munitions to Russia. Russia clearly needs it to continue waging its war. So they're paying very special attention to that. And I think that's what you see here with the defense minister visiting North Korea today.
OK, Greg, thank you very much. Greg Sullivan, tracking the very latest on Russia, Ukraine. To Iran now, it's expected to hold talks about its nuclear program with the UK, France and Germany. The European Union is set to mediate the meeting. It'll take place in Geneva. Today, we understand, Gulnar Motovali joins me now. Gulnar, these talks shrouded in secrecy. It's interesting, the timing and the cadence of this, really trying to get out ahead, one can say, of a next Trump administration.
Yeah, there's a lot going on in the background. We obviously recently had the censure against Iran at the IAEA. In response to that, Iran said it was going to produce more advanced centrifuges for its uranium enrichment program. So there's been some gentle kind of escalation going on in the background. But as you say, the big question mark is the Trump administration. And much of this meeting, I think, is about playing out ideas, brainstorming, as the Iranians put it, between diplomats in Britain, Germany and France, and on the Iranian side, over how they can position themselves ahead of the Trump administration coming into office in January.
And I think that is a global question, isn't it, Gulnar, not just from Iran and the Middle East, but from many nations around the world. Gulnar Motovali on the latest talks set to take place today. Well, the Mexican peso, it made some gains against the dollar after President-elect Trump said he'd had a productive conversation with the Mexican president. Joining me now on how global economies are responding to the Trump tariff stance is Bloomberg's Brendan Murray. Brendan, good to see you. When I look at the readout from Donald Trump on the conversation with the Mexican president and the Mexican president's readout on the conversation, again, it's just the personification of how everybody's posturing for a position here of strength.
Yeah, exactly. Inauguration Day in the U.S. doesn't come for another 7 weeks, but for America's trading partners, the Trump administration, for all intents and purposes, started this week. We saw the social media posts targeting Mexico and Canada with 25% tariffs, 10% tariffs on China. So the incoming president is wasting no time putting America's biggest trading partners on notice that he sees unfairness and he sees some leverage that he could use in threatening tariffs. We saw the euro go down 3% this week. The European Union is going to be a target of the incoming Trump administration. So your trade surplus with America can run, but it's not going to be able to hide, apparently, based on what we've heard already from the President-elect Trump.
I think it's interesting how he has moved the bogeyman away from deficits to the bogeyman is drugs. The bogeyman is illegal immigration. Of course, he said that, he had a wonderful, Mexico and him had a wonderful conversation. You talked about Europe and the response mechanism. We've yet to work out where the Achilles heel is that he will go for there. But Christine Lagarde saying, let's have a checkbook strategy. Ursula von der Leyen said, let's buy American natural gas. This is real pragmatism, political pragmatism, one could say, in the initial stages of understanding what 2025 could be.
Exactly. The transatlantic trade relationship between the U.S. and the European Union is almost twice as big as the trading relationship between the U.S. and China if you add all 27 European countries together. So there's going to be a lot of debate, a lot of friction. The Europeans feel like they have a better trade doctrine going into this trade war number 2 with Trump. They will, of course, negotiate where they can negotiate, but they'll retaliate if they see an opportunity to do that too. So there'll be a lot at stake. A lot of goods, $1.3 trillion worth of trade between the U.S. and the European Union.
Which then takes us to, I mentioned Ursula von der Leyen. I mean, a couple of weeks ago, she said we could still get a lot. We get a lot of LNG from Russia. We could switch that to American gas. Now, she's setting up, of course, the European Commission, this task force. She really is putting competitiveness at the heart of her office. What are the plans? What's the main plans? I mean, is this, again, trying to construct the framework to rise to the challenge?
Yeah, exactly. The Europeans are frustrated with the lack of growth in their economy, and they really need to get down to fixing some of the structural problems. That seems to be otherwise. There's competition from China, there's competition from the U.S. Otherwise, they're going to be left behind.
Okay. Brendan, thank you so much. That is Brendan Murray there on how to negotiate your way into 2025. One market that has decided to recalibrate and perhaps not assume the worst, it's the FX market. The dollar is down over 1.1% this week. It's down 1/8 of 1% this morning. HSBC told me earlier this week, look, if the dollar was a stock, it would be on hold, is very fully valued. And by the way, positioning is incredibly long. Dollar yen did break the 150 level. Tokyo CPI hotter than we had anticipated. And as Brendan just said, the euro has had a pretty brutal week. The question is, of course, as that hotter Tokyo CPI comes through, it puts more pressure on the Bank of Japan to raise rates. We'll keep an eye on those FX markets as we go through. Coming up, we'll look at what else is on the headlines. BlackRock nearing a deal to buy private credit group HPS Investment Partners. More on the story in just a moment, right here on Bloomberg.
Around 67% of the sales for non-residents buyers, they are coming to watch the F1 here in Doha. It's a very promising race. They will decide the winner of the manufacturer, which is, I think, it's a big fight between Ferrari and McLaren, the team. So it's challenging, and everybody is enthusiastic about what's going on.
That was the chairman of the Qatar Tourism Authority speaking in an exclusive interview with Bloomberg as the F1 Grand Prix kicks off in Doha this weekend. A big race and a big attendance expected. Front page news from around the world. This is what we got for you. If you're still out there celebrating Thanksgiving, have a great day. First up, Financial Times reports BlackRock has agreed to a preliminary deal to acquire private credit group HPS Investment Partners. That's according to people familiar with the matter. HPS has been working towards an IPO earlier this year. That would have given it a value around $10 billion. BlackRock declined to comment. HPS didn't respond to a request for comment. Next up, Wall Street Journal leads with this. China has released 3 Americans who had been in prison for years. Mark Swidden, Kai Li, and John Lung had been serving sentences on espionage or drug charges. And Bloomberg leads with the Irish election. Looks like a tight race as the nation votes today. Immigration and housing are the key issues during the campaign. The rising cost of living has also been the focus, despite the Irish economy showing relatively healthy top-line figures. Counting will start on Saturday morning. The first results are expected over the following hours. And also, Bloomberg leads with US Bitcoin ETFs heading for the record monthly inflow on Trump optimism. A week ago, Bitcoin came within $300 of its milestone, $100,000 for the first time, and it got a boost from Trump's pledge to scrap the Biden administration crackdown on crypto. Gary Gensler, of course, leaving the SEC. A lot of angst between the crypto world and the SEC. Let's just have a quick check on Bitcoin for you at the moment. As you can see, it's still trading there. Rest of the markets, this is the way we are. It's going to be a quiet kind of day here in the United States. We've got a shortened trading day. Across assets, I mean, you're still looking at a huge inflow into U.S. equities. There's no doubt about it. 6,034. I can tell you over the past 4 weeks, $141 billion has gone into U.S. equities. Bank of America say you want to be long the U.S. boom and short the global bust. The dollar breaks 8 weeks off an uptrend. It dips. It's down over 1% on the week. And yields are lower, down over 5 basis points and change at the moment. We'll ask Siebert CIO Malek what he thinks of this roll down in bond yields in just a moment, right here on Bloomberg. Good morning. From our global headquarters in New York, welcome to Bloomberg Brief. I'm Menace Cranny. Let's set your agenda. The dollar on track for its worst week since August as the world grapples with the implications of President-elect Trump's trade policies. President Vladimir Putin warns Russia may strike Kyiv with new ballistic missiles in response to Ukraine's attacks. And get your credit cards out. Black Friday's here. It kicks off this year's holiday shopping season. We're live to Macy's later this hour. Good morning to you. Equity markets probably thin trading, but we're eking out a gain here as we go to the close of business this Thanksgiving week. I can tell you the stock market's probably reacting more to the roll down in yields. Bank of America's no doubt this morning long the US boom, short the global bust. JP Morgan joins the fray. They say 6,500 by the end of 2025. That eclipses their average on the Bloomberg terminal of 6,300. Roll it over and you'll see what I mean about the drop in yields. We're breaking lower to pre-election yields in bonds. If you take it from last Friday to this Friday, we're down nearly 20 basis points. This week, we've also had slippage. You had the Besant bounce on Monday. The reaction here overnight is probably more to Putin saying that he may strike at the heart of Kyiv as you have an inline PCE over the past 3 months of 2.8%. So geopolitics very much at play in the bond market this morning, which in part plays to my next guest, Siebert's Mark Malek, writing this. Norm is likely to change into a regime of higher volatility and more systematic uncertainty. To be clear, you can't just now go out and buy VIX futures and hope to make sorrows like gains. Okay, so we can't play it simple. Mark, good morning. Good to see you this morning. So don't waste my money on VIX futures. So if I'm not buying those as a hedge, what is the strategy here? I'm seeing so many bullish notes. Are you full bull into 25?
Good morning. Yes, we are fairly bullish. We think there's a lot of potential upside still. A lot of the policies that we've heard leading up to this point have been very positive, very stimulative to the economy. However, we don't think it's going to be a straight shot up. We have about, let's say, 8 weeks or so between now and inauguration. And that 8 weeks is going to be spent, trying to determine what actually is going to happen day one of Trump's presidency. And we, the only thing we can do is now speculate, which means the market's going to be up and down and sideways. But, for the most part, at Siebert, we believe, our base case is that there's going to be a continuation of the positive trend that led up to the election, even prior to the post-election exuberance.
It's interesting. I keep referring to the Besant bounce. This bond market has moved quite aggressively from last Friday, less so through this week. But overall, Friday to Friday, we've rallied by 20 basis points, down 20 basis points on these bonds. Part of that is Scott Besant, the assumed effect of Scott Besant. But what will matter much more to the bond market is the scale of the tax and fiscal spend. My question to you is this. Does 4.5% represent the $7.75 trillion that is assumed on a fiscal deficit if Trump does everything that he promised?
Yeah, there's so much that goes into that. At this point, I believe it's still kind of, speculation. I think we all are expecting the deficit to increase, even prior to the election, leading up to the election. Mm-hmm. Both sides were promising an awful lot. That's going to cost some money. But bringing some folks in, like you said earlier, like Besant, gives us a little bit of hope that at least from the perspective of his counsel to the president, that they would take a more measured approach. So at this point, unfortunately, there's no math that we can do to say, this is the right yield on the 10-year, for what type of deficit we're expecting. But you can definitely see that there's definitely sensitivity in the yields to certainly the things that are coming out of the upcoming White House. I think the bond vigilantes are out there still, and they're looking for their opportunity to make their case, for let's call it a controlled deficit going forward.
Well, this is where it's going to get interesting. Isaac Boltanski of BTIG was with the team a little bit earlier this week. He said there's an undeniable sense of urgency, and that is Trump has a mandate and he has power with the party at the moment. He needs to go hard, heavy, and large in the first salvo on tax and deficit, because that power and that wielding of power will dissipate as factions rise up next year in the House.
Absolutely. We anticipate that they're going to hit the tax issue hard. And there's so much that they can do that it could be very, very positive and very stimulative without blowing up the deficit. Their initial focus on corporate taxes is a very smart one. It's a good way to incent companies to onshore their activities, by offering such incentives like we've heard, potentially a 15% corporate tax rate for companies that do manufacturing and bring their operations onshore here. We know that works. We see it because we see how companies move to Ireland for their 15% tax rate. So it clearly works. And the interesting part is that if you look at the revenue collected by the government, something like only 6 or 7% comes from corporate taxes. So if you're focusing on that and we're expecting less revenue, it's going to have less of an impact on the deficit than, let's say, a broad tax cut to everyday Americans. Not that we don't want that, and that certainly would be stimulative, but that will certainly cost us more in the deficit than a corporate tax cut. And we expect them to hit that hard right away.
It's interesting if you look at the threes policy from Besant, which is 3% deficit, 3% growth, and 3 million additional oil and or equivalents, and I think it's going to be more equivalents than it is anything else. But that really can infuse an upside in equities and a contraction in credit spreads even further. Is that where to remain long the U.S. boom, the single biggest mistake you could make is to be underinvested or not to add?
Yeah, I mean, everything that we have heard up till now has been very stimulative. Even if they accomplish only a portion of what their goal is, given that, we have a, Republican Congress, both chambers, we have a president who, has run on a platform of stimulation. Mm-hmm. We believe it's going to be stimulative. Obviously, we have to pay close attention to the other stuff.
Very quickly before we go, I mean, we're pricing in the bullish upside, and the narrative is very clear. But there's very little talk about the boomerang, the retaliatory tariffs. Listen to Sheinbaum in Mexico. She's no shrinking violet, and she's ready for the fight. I think maybe we've just got one of those magic moments on TV where Mark's connection just froze. Mark, I don't know whether you heard my question there, which is, we're pricing in all the upside, all the bullishness, the boom USA, but we need to be cognizant of the boomerang retaliatory tariffs, which can be much more insidious than we are assuming at the moment.
Absolutely, absolutely. The single biggest concern of all of us on the street are those tariffs and what's going to happen as a result. Even without retaliatory actions by our trading partners, the tariffs alone could throw a big wrench into the works. Again, we hope that there's going to be a measured approach. I think we saw, that Besant effect is Wall Street's hope that he may provide counsel that would make a more measured approach. But if we get into this full all-out, trade war, it really could throw a spanner in the works. And that's, I think, at this point, the biggest risk that all of us are trying to handicap into our 2025 targets.
Mark, thank you very much for being with us this morning. Happy holidays to you. That is Mark Malek there of Siebert. Coming up, Putin's warning to Kyiv. We'll have the details of the Russian president's latest remarks on using new ballistic missiles. And we'll have to Macy's here in New York City as the shoppers line up for their Black Friday deals. There you go. Everything that sparkles. We'll get to Vonnie Quinn in just a moment. To Macy's. This is Bloomberg. It is Bloomberg. I'm Manus Craney here in New York. The Russian President Vladimir Putin has warned that his forces could strike decision-making centers in Kyiv with new ballistic missiles. Now, his warning comes after Ukraine fired Western missiles into Russia in recent weeks and getting permission from Washington and London. Let's bring in our Bloomberg editor for Russian government and economics. It's Greg Sullivan. Greg, these tensions are ratcheting up. There's a number of things that we need to understand. Where might he target? How well protected is Kyiv? And what is the store of these weapons?
Those are great questions. This does appear to be a pretty significant warning from Putin. What makes it significant is that he's just talking about a missile that was just used last week for the first time. He used it to target Dnipro, a city in Ukraine's central region. Now, Dnipro is a lot less well protected with air defenses than Kyiv is, but ballistic missiles are harder to defend against. Now, the thing that I would caution is that Russia has been targeting Kyiv throughout the war with drone and missile barrages. This month alone, we've seen some of the biggest drone and missile barrages since the war started. They've been quite brutal, targeting civilian infrastructure, energy. But what he's talking about here is using this new kind of missile. And he also warned about the scale of the damage that such a missile could cost. But really, it's part of a broader pattern of escalation that we're seeing from both sides right now.
And we are seeing a shift as well. The Russian defense minister in North Korea for military talks. Again, we understand the scale of commitment from North Korea into Russia. I mean, this is a growing set of relationships between Pyongyang and Moscow.
Right. There is deepening cooperation between the two, and it does appear to be a very important relationship for Moscow. We've heard from both Washington and Seoul. They've accused North Korea of providing munitions and missiles. One thing that's worth noting is that last week when we saw Ukraine fire the ATACMS and Storm Shadow missiles into Ukraine, what we know is that Washington and London gave permission for those attacks, partly because Moscow is sending thousands of North Korean troops to help fight Ukraine. It's an escalation. It's a deepening cooperation that has Washington and its allies on edge, but doesn't appear to be more important. And one way that we understand it to be very important is the caliber of delegates that Moscow is sending. And here, this week, we see the defense minister visiting Pyongyang.
Okay, Greg, thank you very much. Greg Sullivan there, tracking the latest news flow from Russia. The Mexican peso made some gains after against the dollar after President-elect Trump said he had a productive conversation with Mexico's president. Joining me now on how global economies are responding to Trump's tariff stance is our Bloomberg Richard Bravo. Richard, I look at the readout. Trump talks about a wonderful Mexico. They're going to close the borders. Sheinbaum says we didn't discuss tariffs on the call on Wednesday, and there is not a potential tariff war, and we're not closing the borders. So again, very much, take your interpretation the way you will. We're shaping up to a real verbal sparring with leaderships and different readouts, aren't we?
Yes, as you mentioned, it's a very chaotic situation. And as you're referring to, Trump announced very, very publicly earlier the possibility of imposing a 25% tariff on Mexican goods in an effort to curb the flow of drugs and migrants into the U.S. Now, obviously, this is a massive announcement because Mexico has become the U.S.'s largest trading partner, and they do some $800 billion in bilateral trade every year. So the effect was pretty stark, and many analysts revised downward the forecast for Mexico in 2025, and Bloomberg Economics actually said such a move could risk nearly 11% of GDP But as you said, Trump said in a posting afterwards that they had a wonderful conversation, that Sheinbaum had effectively agreed to shut the southern border, which would acquiesce to Trump's demand. This led to some reversal in assets pairing losses from earlier in the week. But an hour later, Sheinbaum posted on X saying that they had a very different conversation, and that shutting down the border was not something that she was willing to do. So it really underscores the level of volatility that traders can expect, and the fact that very important, very large policy decisions are going to be debated very publicly. So it's going to be a wild ride.
And you've got the economy minister coming out this morning saying your SUVs in the USA, they're going to be $3,000 more expensive on your pickup trucks. So, the pushback is there. Two formidable negotiators in Europe, I would say to you, very pragmatic leaders, Christine Lagarde and Ursula von der Leyen. Lagarde just says, get your checkbook out, just look large.
Yeah, it's a big debate in Europe, and it's actually one that European leaders have been preparing for quite a while. And Bloomberg reported a little bit ago that the EU has actually prepared already a list of companies to target with tariffs in the event that there is an escalation in a trade conflict. Our sources have told us that the EU is very careful about not wanting to escalate the situation with Donald Trump, but they're not going to take it sitting down, and they will target specific companies with tariffs if he were to impose a flat tariff that hits Europe.
Well, of course, the Achilles heel is sort of maybe on the auto industry, etc. Let's see what happens. But you got to hand it to Christine Lagarde. Checkbook strategy. We could offer to buy certain things. Ursula von der Leyen herself a couple of weeks ago said, "Yeah, let's buy LNG from the United States, maybe more expensive from Russia." So it's a policy of appeasement, one could say, in the rhetoric at this stage. Thank you very much for being with us. That is Richard Bravo there on how to negotiate with Trump 2025, the incoming president-elect. It is Black Friday. Retailers in the US are hoping to see most shoppers on record over the Thanksgiving weekend. Vonnie Quinn, we've sent her out, the intrepid reporter. She's outside Macy's. We'll see whether she gets in there a little bit later on. Good morning to you, Vonnie. So you're in Midtown Manhattan. I need to know, are we queuing up? Are we gunning for Black Friday?
13 minutes to go before the store opens, Manus, and the tradition has not died. There is a half a city block of customers here waiting for those first doorbuster deals and perhaps a little gift card for the first few in the door. Apparel seems to be what many of these first customers are looking for. But it's interesting you say that, because it is, a crisp 35 degrees here on 35th Street, and the cadence may have changed, but people are going to be in stores today, that's for sure. The National Retail Federation says 131.7 million people are expected to shop today, and 2/3 of those are going to be in store. So that tactile customer hasn't gone away. It's also, of course, a tradition and something social to do. Maybe not at 6 a.m. though.
No, it's only you, me, and the Brave that are up, and the whole production team that are here. Where are we on the inflation narrative? If we go back 4 years ago, right, you look at the Pew Research, prices are 22% higher. They may tell you that inflation's 2.8%, but the reality of it is this. It's 2.8% on a 22% bump in prices from 4 years ago.
Well, that's just it, Manus. Inflation has been eating away at the pocketbooks, and we know that those pandemic savings have gone away. They're done. We also know that household debt is up just a little bit, and while personal income and spending is also higher, which we saw in Wednesday's data, consumers have been pinched. Now, one bright spot is that gas prices are lower, so those extra pennies are in their pockets for the moment, but they may be eyeing ahead to the future, and particularly the potential for tariffs. You were just talking about it a moment ago. There is the potential that many of the items that customers are shopping for today, from your TCL TVs to your clothing that may originate in Mexico, may be more expensive next Black Friday, and so this Black Friday is the time to buy. Dana Telsey of the Telsey Advisory Group says there could be an $80 billion impact of tariffs if President-elect Trump does go ahead and put on the tariffs that he's been threatening, 25% more on Canada and Mexico goods. And if you think about your Canada Goose coats or any of your apparel or your Dyson hair wraps, which are made in Southeast Asia, well, they could all be more expensive next year.
Good to see you're in there with the expensive brands with the Canada Goose coats. Look, we've got Black Friday, then we roll into Cyber Monday, and you know, we have this concertina effect, and this is something that Dana has actually talked about, and she'll be with the surveillance team a little bit later on. We've got less shopping days to actually deal with between now and Christmas, and that concertina effect will have an impact.
Yeah, 5 fewer shopping days, which is quite a lot, Manas, and it's really amazing to think that there will still be record numbers of dollars spent. So the National Retail Federation, again, is looking for growth of between 2.5% and 3.5% in terms of holiday spending. That is down from the 3.9% growth that we saw last holiday season, but it is growth nevertheless. And Bain, the consultancy, has estimated that just this weekend alone, between Black Friday and Cyber Monday, consumers will spend $75 billion. That's a lot of dollars going into the economy. So there are a lot of shoppers out there. And of course, we need to mention AI. I don't know where we'd be if we didn't have mentioned AI. 44% of consumers say that they are going to use AI to shop this year, according to a test. And that might be putting together an itinerary. It might be having AI help them look for the best deals. It might be AI shopping for them. But AI is definitely going to be part of the picture for sure this Black Friday.
Well, Bonnie, good to see you. I'm not going to join you, even though we get off in a couple of minutes. I want to make sure that you get in there and bag a bargain, and I want to see it on Instagram a little bit later on. Bonnie Quinn on the intrepid search for the bargains of Black Friday. Bonnie, well done at Macy's there. Coming on, we'll set you up for your shortened trading day in just a moment. Context matters on Bloomberg every day from New York. Good morning. It's Bloomberg Brief. I'm Malek in New York. Let's set the agenda for you a little bit later today. Markets are closed early today. Equities will close at 1 p.m. and the bond market will finish by 2 p.m. So let's cast it forward to next week. We're going to get Fed speak from Governor Chris Waller, the New York Fed President John Williams, and that is ahead of Jobs Day on Friday, which is the all-important. President Biden will travel to Angola most of next week for his final trip before the end of his presidency. A couple of stocks which will be in focus: NVIDIA and Applied Materials. U.S. chip equipment stocks rise as China curbs said to be a little bit milder than we'd anticipated. Keep an eye on Carnival. They've got a rating change, a new market perform over at Bernstein. But the price target is $26. That's having a nice little bit of a bounce for them this morning, up 2%. I leave you with a view on the bond market. We're breaking lower. Friday to Friday, we're down by 20 basis points. This week, a little bit less. You've had the Besant bounce on Monday, and this morning it is geopolitical risk, where Putin says he may strike Kyiv. That has added to, I suppose, making these bonds more responsive to the geopolitical risks. That's it from myself and the team here. I hope you had a good Thanksgiving. Bloomberg Brief for this week. Surveillance is up ahead next on Bloomberg.